Want to invest in a high quality company? How about getting a good deal on that investment? Like the idea of collecting safe, growing, market-beating dividend income too? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us get the word out and grow the channel, and I'd really appreciate it. And make sure to stay tuned until the end of the video for a special news announcement. I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is producing some of the world's most well-regarded engines. Our economy is industrialized, fortunately so I might add. All of this stuff getting produced and moved around, that requires mobility, and mobility requires engines. More stuff, more mobility, more engines, more profits, more dividends. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. Getting back to the stock I'll tell you about today though, perhaps best of all, it looks undervalued. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of Cummins Inc, which appear to be trading at a significant discount today. Cummins Inc, stock ticker CMI, is a multinational company that designs, manufactures, and distributes engines, filtration, and power generation products. Founded in 1919, Cummins is now a $33 billion by market cap manufacturing giant that employs nearly 58,000 people. The company reports results across 5 business segments: engine 32% of fiscal year 2020 sales, distribution 29%, components 24%, power 15%, new power less than 1%. Cummins makes most of its money by manufacturing, distributing, and supplying components for a range of diesel and natural gas engines. A variety of vehicles use these engines. This includes heavy-duty trucks, medium-duty trucks, buses, recreational vehicles, construction machinery, agricultural machinery, and watercraft. In addition, Cummins is preparing for the future of mobility by investing in fully electric and hybrid powertrain systems, as well as hydrogen fuel cell technology. This company, in a roundabout way, forms part of the backbone of our industrialized economy. Goods are often produced and moved around using the power generation products that Cummins manufactures. That's why it's been around for more than 100 years, and it's highly likely it'll be around for another 100 years and beyond. This should translate to continued growth in their profit and their dividend. Already, Cummins has increased its dividend for 16 consecutive years. Neither the Great Recession nor the pandemic stopped them. The 5-year dividend growth rate is 8.5%. The stock offers a current yield of 2.5%. I see that combination of yield and growth, which is in the low double digits, as quite compelling. This yield is within 20 basis points of its 5-year average, and the payout ratio is a low 39%. Looking at business growth, Cummins has increased its revenue from $18.048 billion in fiscal year 2011 to $19.811 billion in fiscal year 2020. That's a compound annual growth rate of 1.04%. Meanwhile, earnings per share grew from $9.55 to $12.01 over this period, which is a compound annual growth rate of 2.58%. These are middling results at best. However, as we all know, fiscal year 2020 was extremely unkind to most businesses. Ending this 10-year period on fiscal year 2020 artificially and negatively skews the company's long-term growth profile. Cummins has already started to bounce back though, with trailing 12 months earnings per share at nearly $15, up almost 24% compared to earnings per share for fiscal year 2020. Looking forward, CFRA is forecasting that Cummins will grow its earnings per share at a compound annual rate of 15% over the next 3 years. This can look awfully aggressive against the 2.6% or so earnings per share compound annual growth rate that Cummins actually produced over the preceding 10 years. Then again, it doesn't look aggressive at all when you look at the recovery that's already taking place for Cummins. CFRA points out, rightly so, the 1-2 punch that Cummins offers. Cummins has a strong legacy business that's also being positioned for the future of mobility. It's a past-future combination that's exciting. CFRA says this, and I quote, "We expect CMI's market share for medium-duty trucks to remain strong, around 80%. We expect increasing adoption of battery electric powertrains, especially for buses and tractors, in coming years," unquote. They then point this out, and I quote, CMI benefits from leading-edge technology in truck engines and fuel cell development, aiding market share, unquote. If you want today's best propulsion, you're probably going to Cummins. If you want tomorrow's best propulsion, you're also probably going to Cummins. I see CFRA's near-term earnings per share growth forecast as reasonable considering more recent results. That easily sets the company up for continued high single-digit dividend growth for the foreseeable future. Moving over to the balance sheet, Cummins has a fantastic financial position. Their long-term debt-to-equity ratio is 0.45, while the interest coverage ratio is over 24. Profitability is consistent and robust. Over the last 5 years, the firm has averaged annual net margin of 8.12% and annual return on equity of 23.29%. I see Cummins as a high-quality company that's aggressively bouncing back as they position the business for the next century of energy and mobility. And with economies of scale, switching costs, barriers to entry, IP, R&D, technological know-how, and brand power, the company does have durable competitive advantages. Of course, there are risks to consider. Regulation, litigation, and competition are omnipresent risks in every industry. Cummins is in a unique situation where they're often competing with some of their biggest customers, such as truck manufacturers. The company is directly exposed to economic cycles by catering to heavy industry. There's customer concentration risk, with sales to the top 4 customers accounting for approximately 32% of fiscal year 2020 sales. If engine technology changes faster than Cummins can adapt, this leaves the company at risk of falling behind. Any major changes to trucking in general would impact Cummins. Even with these risks known, I still happen to believe that this company can be a great long-term investment for dividend growth investors. And after a 15% plus correction from its 52-week high, the stock looks attractively valued. The price-earnings ratio is 15.6. That's much lower than the broader market's earnings multiple. It's also quite a bit lower than the stock's own 5-year average price-earnings ratio of 17.5. We see a similar disconnect in the cash flow multiple with the price-to-cash flow ratio of 10.4, well off of its own 5-year average of 11.5, and the yield, as noted earlier, is very close to its own recent historical average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 7.5%. This dividend growth rate is slightly lower than the demonstrated long-term dividend growth rate from the company. It's also right in line with the company's most recent dividend increase of 7.4%, which was announced in July. While it looks high when you see the 10-year earnings per share growth rate, I see this result as inaccurate. CFRA is forecasting double-digit earnings per share growth for the next 3 years, and the payout ratio is very low. Also, the balance sheet is extremely healthy. I think this is a fair expectation for future dividend growth. The dividend discount model analysis gives me a fair value of $249.40. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow growth. It then discounts those future dividends back to the present day to account for the time value of money, since $1 tomorrow is not worth the same amount as $1 today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates CMI as a 3-star stock with a fair value estimate of $230. CFRA rates CMI as a 4-star buy with a 12-month target price of $270. I came out almost exactly in the middle. Averaging the 3 numbers out gives us a final valuation of $249.80, which would indicate the stock is possibly 8% undervalued. Here's the bottom line, guys. Cummins Inc. is a high-quality company with great fundamentals that's smartly positioning itself for the future of its industry, with a market-beating yield, inflation-beating dividend growth, a low payout ratio, 16 consecutive years of dividend increases, and the potential that shares are 8% undervalued. Dividend growth investors ought to take a good look at this stock right now. And now for a special news announcement. Albemarle Corporation, stock ticker ALB, just announced that it reached a new 3-year labor contract with workers at its Atacama salt flat plant, which ends a strike. This eliminates a disruption and gets Albemarle back on track. I've highlighted this stock a number of times on the channel, including back in April, as a way for dividend growth investors to play the lithium boom with a high-quality dividend aristocrat. If Albemarle isn't already in your portfolio, keep it on your radar.
Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did.
and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.